Hello and welcome. You're watching First Stick here on News9. I am Suyash Maheshwari and with me in the studio is Amit Ranjan. Now, it's a brand new start to the week. So far, 2024 has turned out to be choppy with Nifty ending lower, albeit marginally, in the first week of 2024. However, we saw a strong recovery in the latter half of the week, which pretty much put the bulls on a stronger footing. But we'll get to our markets in just a bit. Let's look at the global handover first. Amit, over to you.
US is again in the green. Dow Jones closed the last week in the positive at 0.07%. S&P 500 closed at 0.18% in the positive. Nasdaq closed in the positive at 0.09%. Moderately, but still in the positive. The European markets were in the red. The stock 600 closed the last week at 0.27% in the negative. Hang Seng today, coming to the Asian markets, Hang Seng today is slipping as we speak. At 9:30 a.m. it was minus 1.96%. Nikkei, however, is in the positive marginally at 0.7%.
Alright, so the global setup still looking rather weak, especially the Asian markets opening lower. And if we talk about the US markets, quite a bit of weakness has set in the last 4 days. And I mean, this is a given because the kind of Santa Claus rally that we saw in December, where the markets ran up by about 7-8% or so, some bit of pullback is not only appreciated, I think it's desirable at this point for the market.
And coming to the Asian markets, they are not just in the negative. Hang Seng is slipping. So as we speak, it is below 2 now.
All right. So, but despite that, we opened on a flattish note. Now, Indian markets, as I mentioned earlier, opened on a flat note with a positive bias, with the first stick for Nifty coming in at 21,747 mark. However, the weakness that we were talking about in the Asian markets, that has caught up with us as well. As of 9:30 a.m., in fact 9:40 a.m., Indian markets had slipped into the red and Nifty was below 21,700. Now, this is critical because 21,700 was the first support that the market was looking for. That is a 61.8% retracement level for the entire fall from the record high to Thursday's low. We have broken below that. The next support works out at 50% level, which is 21,667. So far, the index has managed to defend that, but as the session goes by, that becomes a crucial support for us. Sensex, on the other hand, was also down. In fact, it's down by about 0.18% and in fact has moved below the 72,000 level. There is quite a bit of weakness in the broader markets as well. Nifty Midcap 100 as of 9:30 a.m. this morning was down 0.64%. At 47,093 levels. We were at 47,300 sort of levels on Friday. So we have slipped by about 250 points or so on the mid cap index, and the small cap index is also down by 0.63%, but still holding above the 15,000 level. The volatility has picked up once again. India VIX is up 4% or so and sits at around 13.15 level, but this is still considerably low given the fact that we were at 16 sort of levels just 5-10 sessions ago. So a good dip in a volatility, and that's something that the markets would rather appreciate. But with that, let's also bring on board Avni Bhatt, Senior Vice President at JM Financial. Good morning, ma'am. Thank you for joining us here on News9. Now, the first week of 2024 turned out to be a volatile one, although we saw a good bit of recovery in the latter half of the week. But even this Monday morning, we have broken below the crucial support levels of I think 21,700. So what are the levels that you will be tracking going forward?
Good morning, Suyash. Good morning, Amit, and a very good morning to all the viewers as well. Nifty actually, what we had discussed last week, it's in line. The price movement is seen in line with that. It is consolidating in this range of 21,500 to 21,800. Now, if you look at the options built up, 21,800 call is gathering a lot of open interest. So the resistance level is strengthening over there. And on the downside, if you look at the short-term trading view, then the 10-day moving average is around 21,590. So that is a crucial support that one needs to watch out for. And in case if that breaks, then the option writers, the put writers support comes at around 21,500. So as of now, the consolidation view continues. It should consolidate between 21,500 to 800, and only on a breach of around 21,500 level, then we may see a sizable correction, maybe probably up to somewhere around 21 200, 150 to 200 level on the downside. And as far as the broader view is concerned, I think this entire rally that we have seen in last 2 months, probably 95% of that rally is already done. And we may, in case of some positive trigger, we may see the remaining 10% of the rally that can take Nifty to around 22,000. But that's only on the condition that it closes about 21,850, which as of now, looking at the weekly options data as well as the monthly options data, looks a little difficult. So one should be prepared for a sizable downside up to at least around 21,200. But considering the broader view, it's a very good, it's going to be a good, healthy correction, because if this uptrend has to continue, some bit of consolidation is required. And that is what we are looking at it right now.
All right, as the market continues to correct, we are in fact holding above the 21,590 mark so far at least. But what's your view on the banking pack? Now, Nifty Bank has been struggling with 48,000. You know, we closed above it last week, but in fact this morning we have slipped about 50-60 points off those levels. What's your view for Nifty Bank?
Yes, so Big Daddy has always been a laggard in this entire rally. It has been the last participant in the rally. And going forward also, in case if there is no support coming in from Bank Nifty, then it's going to be difficult for Nifty also to scale up to 22,000. As far as the levels are concerned, Bank Nifty, the major support level stands at 47,800 on the downside. And if that level is breached, then we may head towards around 47,400 on the downside. And on the upside, 48,500 remains to be the crucial resistance which Bank Nifty needs to cross in case if it has to scale up higher to around 50,000 level. 49,000 in between is just going to be a mild barrier, a round figure barrier. But above 48,500, we'll be looking at around 50,000 figure. That looks right now a little difficult. On the downside, it should hold on to 47,700. As long as 47,700 level is held on to, I think there will be an attempt to cross 48,500.
Good morning, Avni. Now, last week we had been talking about a sector that has delivered huge returns to its investors, the capital goods sector. And one of the companies that shone out of the pack was Hindustan Aeronautics Limited. Over the last 1 year, the share has gained almost 138% for its investors. Now, as of Friday, HAL joined the elite group of companies with a market capitalization of over 2 trillion rupees. Their stock on Friday jumped to a high, almost 6%, to 3,050. Right now, it is hovering around 3,019 types. It becomes the 7th PSU in India to have a market capitalization of over $2 trillion. Over the last 10 months, the stock jumped, of course, 120%. Last 1 year, 138%. HAL's order book is likely to grow from 0.8 trillion rupees in financial year 2023 to 3 times to 2.4 trillion rupees in financial year 2024. First question, is it going to be, do you think that like BHEL, this stock scrip is also going to be re-rated? And is it a time to buy when it is around 30.15? It will cross even the last week's high of 30.50.
Yes, so on HAL, our view is extremely positive, but it's on a little longer period of time. Say probably in next 3 to 4 months, we are looking at targeting levels of somewhere around 3,200 to 3,250 on the upside. And any dips in the stock should be used as a buying opportunity. Dips can occur, see, because from short-term trading point of view, there's a lot of open interest built up at 3,000 call. And that's why probably we are looking at some resistance, and it had already opened with a huge gap up above 3000 on Friday, but there was no shedding in the 3000 call. So the call writers are steadfast here, and until and unless we see any kind of unwinding happening at 3000, immediate hurdle is between 3000 to 3050. The stock may give a dip up to around 2960. That's a very, very good level to enter into the stock. Long-term view, by long-term I mean around 3 to 4 months. We are targeting around 3200 to 3250. So view positive. Any dips till 2960 should be used as a buying opportunity. And the overall stop loss on this entire trade can be kept at 2870 from where the breakout had occurred.
Avni, you spoke about 3 to 4 months. HAL could benefit almost $60 billion worth of orders in defense from aircraft orders from now till financial year 2028. So even for the very long-term investors who want to buy and keep, is it a good stock to get into right now?
Definitely, it's a very good stock. Longer the time horizon, I think it's more lucrative to get into the stock. And one can probably look at buying it on SIP basis, or whenever there's a dip in the stock, one can accumulate the stock. We are targeting 3250 level in 3 to 4 months, but if you have a horizon of 5 years, it's a stock to be accumulated, kept in the portfolio.
All right, that's the view on HAL. But Avni, stay with us as we'll be right back after a short break.
जानना है तो देखिए, समझना है तो सुनिए, सीखना है तो पूछिए, और कमाना है तो खरीदिए। जानकारी, सलाह और निवेश सब एक ही सुपर ऐप पर। पैसे का सवाल है तो जवाब है Money9। आजादी पैसे की, अभी डाउनलोड करें।
Ram's Ayodhya rebuilt. Ram Lala's Pran Pratishtha. Countdown to January 22nd. Dateline Ayodhya. Catch the mega coverage only on News9 Live.
Since the last 2 years, Khalistani terror groups are threatening Indian diplomats in Canada, US, UK and Australia. Investigations of these threats led us to the first ever abduction and killing of an Indian diplomat, Ravindra Matre, in UK's Birmingham in 1984. Our months-long investigation finally led us to the murderer of Ravindra Matre, who has been hiding in Pakistan-occupied Kashmir for the last 40 years. Watch our exclusive documentary, Murder of an Indian Diplomat, where we reveal the man who killed Ravindra Matre.
Stop searching, start streaming. Download the world's first news OTT, News9 Plus, ahead of the curve.
The scale of the attack was something that we were surprised at. David Hadley was a double agent. The Americans did not want him to be fully exposed, so all that he probably shared with the Americans was not shared with us in terms of intelligence. If we had that, I'm sure that we would have been able to deal with the situation far better.
This and more streaming on world's first news OTT, News9 Plus. Download now.
Welcome back. You're watching First Stick here on News9. And Avni, I'll come to you right away because we are running short of time. Now, Titan came out with its Q3 business update, and revenue overall grew by about 22%. Jewelry segment saw 23% year-on-year growth. But I was reading some of these brokerage views. They were saying that the numbers are softer than expected. But the stock has opened higher. In fact, we are at record levels. On a 6-month basis, the stock has given very good returns of about 22 to 25% or so. So what's your overall take on Titan? Is this a stock that one can look to enter, considering that on a 6-month basis we have seen good returns, but a little bit of mutedness in the last 1 month or so?
So Titan again is a stock wherein it's like buying gold. You keep buying the stock, you keep accumulating the stock. If you look at the last few years performance, the stock has risen from its lower levels. So any kind of dip up to around 3,700 should be used as a buying opportunity even for short term. And we are targeting around 3,800 to 3,900 in a very short term. And for such stocks, I think the best thing to do is you keep trailing your stop losses. The stop loss from current level should be kept at 3,640.
Okay, Avni, 3,640 for Titan. What are your picks for the investors today?
So I'll quickly take you through 5 of the curated stocks for this week that we have taken out. And so first is L&T. L&T one can buy with a stop loss of 3,455, and we are targeting 3,650. Next is Biocon. Biocon again has given a monthly breakout about 278. So one can keep a stop loss of 277. And it has already seen an open interest addition of 5% last week. So one can add Biocon to the portfolio. Target would be around 350. The third stock is Ultratech Cement. It has seen some kind of selling pressure in last week, and it has come near the support level of 10,000. So around 10,000 level, one can enter into the stock for a target of 10. And the other 2 stocks are Power Grid and HUL. So Power Grid also we are targeting around 254 on the upside, keeping a stop loss of 234. And HUL would be a buy on dips up to around 2590 to 2600. Target would be 2740 and stop loss would be 2570.
All right, those are the short-term trading ideas from Avni Bhatt. Ma'am, always a pleasure speaking to you. Thank you for joining us here on News9. But moving on, let's look at the markets. We have in fact clawed back some of the early morning losses. Nifty, as we speak, has bounced back from around 21,644 levels or so, and we have moved up by about 40 points or thereabouts. But still holding below the 21,700 mark. Sensex, on the other hand, is also below the 72,000 levels, about 69-70 points shy of it. The mid cap and the small cap indices continue to trade lower. They are underperforming the headliners. Nifty mid cap is down 0.64% and the small cap index is down about 0.63% or so. Volatility continues to remain elevated. India VIX sits at about 4% higher at 13.15 levels. But with that, let's bring on board Mr. Gaurang Shah, Senior Vice President at Geojit Financial Services. Sir, first of all, thank you for joining us here on News9. Now, a choppy start to 2024. Nifty gave up in the somewhere around 200 points or so midweek, but we saw a good bit of recovery in the latter half of the week. But this week, what are the factors that will be in focus?
Thank you, Suyash, and morning to all of you all. So, I think not much will happen this week. Possibly next week onwards is what we'll see the Q3 numbers unfold for this financial year, and I think that's where the focus is going to be as far as the fundamentals of the market are concerned. And our consensus on the Q3 earnings is that, I'm talking about overall, that it's going to be better than what we've seen in second quarter. And possibly third quarter will have more reasons to revise the target upwards on fallback of the numbers that we'll see and dissect. We are in a consolidation zone this week. We'll possibly, spend a large part of this week consolidating in the range of about 21,600 on the lower side, 21,800, 21,750, 21,800 on the higher side. So that's going to be a broad range for the market, wherein we'll oscillate between these two levels. And all opportunities on the downside should be focused on investment ideas rather than trading, because it can turn out to be a little bit choppy. And investment themes are plenty to look at, Suyash, from long-term perspective. So it's better that, some days and weeks, it is better to see the market consolidate, see some profit booking, so that it gives opportunity for all those lost investors who are possibly waiting on the sideline. I think whatever triggers that are witnessed in terms of data points are nothing to complain about. They are in line with expectation or better. So we should spend some time consolidating. This is the overall view of the market this week.
All right. And Gaurang, you were mentioning that there are certain pockets which look attractive at this point in time, because we have seen a sector rotation take place, over the course of last 3-4 months. It started with the auto pack, pharma and, IT drove the markets higher later on, and now it's the banks turn. What are some of the themes that could, drive markets higher from here on?
Banking, both public as well as private, strong NBFCs. And the reason behind it is, over the last week or 10 days, we have heard the advances, deposits, and loan book numbers. And if you just go by that, you can possibly have a very overall idea as to how the numbers are going to look for the entire banking and finance. And lot of these companies have actually come to the market to raise funds. Case in point, Bajaj Finance came to the market, and I think in excess of 8,500 crores is what they have raised, giving you an indication that they are very optimistic about the loan book growth. And at the same time, you have gross and net NPA coming down, provisioning coming down. Interest rates have been stable for the last 6 credit policies. At Geojit, we believe first 3 months of calendar 24, that is Jan, Feb, March, if all goes well, and if inflation is something that doesn't raise its ugly head, then we can possibly brace ourselves for some small bit of rate cut, subject to provided all the data points are supported. Second one is autos. Third one would be IT. As always, we've been positive on IT, and I think there should be a better shade and color that the IT sector has to tell us in terms of numbers. Metals, cement would be the other two pack, and I have also spoken about 3 sectors that we primarily would want to focus on. That is defense, power generation, transmission and distribution, power equipments, and railways. I think these 3 sectors are in for a long haul of good orders coming in, and their capability of executing the order book would translate into earning visibility.
All right. And Gaurang, you just mentioned that, inflation, at least the softening of inflation, will be keenly tracked. But, this crisis that's brewing in the Red Sea, is that a cause of concern? Because the markets have not really factored that in much. We have not seen a big correction since the beginning of these disruptions.
So our external affairs minister was in Moscow, and an alternative route has been planned with respect to transportation. And my sense is, despite of these news flows, you are having crude Brent below $80 a barrel. This morning, somewhere close to about $77 or $78 a barrel.
Yes.
And MX is trading at about, I think, $73 or $74 a barrel. And I think we have managed to safeguard our energy security, Suyash. And the government has got all the capable people and minds to make that sure. So I don't think this particular event in the Red Sea would play a major spoil sport in terms of crude oil prices jumping up. And I think countries and alliances would make sure that that kind of a situation does not arise. This with a caveat that any major disruption in the global supply pipeline of crude oil can lead to issues not only with India but also with the rest of the world.
Good morning, Gaurang. You mentioned banking, both PSUs and private, as the sectors to look at. Now, a little background for the viewers before I ask you my question. India was one of the biggest enticers of foreign portfolio investments and investors in the year 2023. And the trend seems to continue. As of Friday, that is the 5th of Jan, FPI has purchased 1700 crores of rupees worth of Indian stocks. FPI has bought equities worth 1.77 lakh crores in the year 2023. This is the highest ever in India's history. 1/3 of all those investments happened in the month of December. This, of course, after the confidence that the Fed will not increase rates, may actually bring down rates. 45% of total inflows in December happened in the financial sector, amounting to rupees 29,168 crores in December itself. That is staggering. Curiously, FPIs had withdrawn around 3,993 from the financial sector in November. But this was followed by the sector that followed was the capital goods sector with 8,674 crores in the November-December, IT with 5,997, and then healthcare, construction and consumer services. My question to you, one, is this trend going to continue, and what was the reason of the little bit of a flip-flop that in November the financial sector actually saw a withdrawal of foreign portfolio investments and a big jump in the month of December?
Morning to you also. So, to answer your question in one line, all these data points that you rightly mentioned, I think will beat all those numbers in 2024. It's going to be a little bit patience given the fact that we have a big event in form of general election. But I think if you have to believe the tailwind with respect to the 5-state election result that we saw last year, then I think possibly you are getting some kind of an indication. Point number one. Point number two, I think I was reading a report this morning. India has just beaten Taiwan in MSCI Emerging Market Index with respect to weightage as well as performance, and we are second to China. And if we are going to clock a run rate of 7% plus GDP growth rate, and if more and more financial inclusion is going to be unfolding, and despite of all these data that you just told me in terms of flows coming in and little bit of flows going out, last year if you go to see somewhere around second half of 2023, there was a huge outflow of foreign institutional investors from India on fallback of whatever Fed had told us at that point of time. So somewhere wisdom is awakening with foreign institutional investors and FPI investors, that if you have to look at emerging market, then you cannot ignore India. And with my earlier conversation with Suyash, I had mentioned this statement that you can hate India, but you cannot ignore India. So I'm quite sure that possibly post the big event this year, general election, all these numbers that you've spoken about in 2023 will be broken to a record high.
That's the view coming in from Gaurang Shah. Sir, always a pleasure speaking to you. Thank you for joining us here on News9.
Thank you so much. Thank you.
But moving on, let's also look at how the markets are doing this morning, and we were seeing some bit of a recovery, and that continues. In fact, Nifty as we speak has pretty much clawed back most of the losses and making a move towards 21,700 once again. But remember, 21,705 will offer some hurdle, because that was a 61.8 retracement level that we were tracking as a key support. But now since we have slipped below that, that becomes a crucial resistance for the index, at least in today's session. Sensex, on the other hand, is also making a move towards 72,000. As of 10:10 a.m., we are just about 40 points shy of that mark. The mid cap and the small cap indices both are seeing some bit of recovery as well. The mid cap 100, which was down, both indices which were down by about 0.5% or so, in fact more than 0.5%, are down about 0.2 to 2.25% or so. The Nifty mid cap 100 index as we speak is making a move towards 47,300 levels, and that is where we close on Friday. The small cap index also is inching towards the 15,500 mark. We are currently above the 15,400 levels, and volatility that has slipped slightly. India VIX is still up for the day. It's up about 4% or so and is at 13.13 levels. But remember, it's a big decline from 16 sort of levels that we were seeing somewhere around midweek last week. But with that, it's a wrap on this edition of First Take. Stay tuned with us as we'll be right back with Business Plus on the other side.
Ram's Ayodhya rebuilt. Ram Lala's